Everyone, it's Zach with Palantir Research. We've got major news from another major financial institution that has rated Palantir, and this is initiation, meaning they haven't covered them yet before. And I think the timing is kind of funny, but I'll go into that later. So the analyst, Stephen Bursey, who has a decent tip ranks record with a 70% success rate and average returns of 20%, rated Palantir a hold and with a price target of $16. And this is HSBC. So they're an old bank from the 1800s and have a $152 billion market cap. So they are significant. Now, what I find fascinating is the timing of this rating first. So we know HSBC institutional ownership is relatively consistent with this rating also, and even the price target. So we know 13F data is delayed, but we see that they were buying Palantir earlier in the year, but now we've seen some stabilization and selling off just a little bit. And to be honest, when they reduced their position recently, it seems that was when Palantir could have been higher than their price target. So to me, it really sounds like they don't know where the stock can go because any traditional metric would say they're overvalued. But then you hear about the potential and the multiples that can possibly be applied here because it's still kind of uncharted territory with artificial intelligence. Because they're not monetizing AIP yet. Also, we don't really know what the significance is yet. So it seems that they're really at this point, where do you dock the company for giving it away for free? Or do you give them kudos because looking back at an Amazon, for example, taking market share was the right move, but not everyone recognized it back then in the day. So even though they were unprofitable, it turned out to be a good move. We don't know if it'll be the same for Palantir, but you never really know. Now, either way, that's just my speculation, but it's nice to see some level of consistency of an institution doing what their analysts think as well. It'll never be perfect, of course, with bureaucracy and different leadership in different areas of a large company, but it's happening at least right now. Now, for the price target of $16, it seems convenient they put this because of the stabilization of Palantir's price the last couple of weeks around this range, where we've literally bounced hard up from the 14s and rejected really hard as well, breaking into the 16s. Now, it's up to you if you think this is under, fairly, or overvalued, and that will vary with your investing goals, of course, too, and who you are. But for HSBC, it seems to be the right place right now, and that's around that $30 billion market cap. Now, this year, we are healthily going to hit $2 billion in revenue, so it's essentially assigning this at least in probably 15-ish, 16-ish price to sales ratio wherever we land. Also, they released this the day after AIPCon too, so this can be a reflection of what their thoughts are from the event overall. And with the price target and rating, it seems it was a net neutral to them, where they don't see it necessarily as groundbreaking, meaning they're totally under the radar and need a higher rating and price target. But also, it's not a complete failure either, because they didn't give it a lower rating or price target. So they really took it to the middle here, and maybe it just means they don't know. So I'll take that as a win at least, because we're still educating the market on artificial intelligence and the usage of it. And honestly, I think it's still going to take time. But even further, I think just getting coverage of Palantir is good in general for investors because it starts to build up the consensus of the analysts. Now, it's not as extreme as I say with the air quotes on your perspective, of course, Bank of America, Dan Ives, or Morgan Stanley on the different ends. And you can take either side, of course, whatever you think. But in the end, it's a win for investors because it further legitimizes Palantir as a company. And this will probably keep happening as S&P eligibility is official and profitability continues. And eventually down the line, get into the S&P officially. So timing-wise, who knows when that's going to happen. But those are significant events that lots of institutions look out for. And if you maintain profitability, why not cover that company? But what are your thoughts though on this quick news here on the new price target? Do you agree with the $16 price target and the hold rating? Let me know below, and thank you all for watching and my channel members, and I'll see you in the next video.